Indutrade's result continues to show strong development, with net sales for the first quarter of 2014 increasing by 10% to 2,250 million Swedish krona. Incoming orders increased by 7% to 2,349 million krona. Operating profit before amortization of intangible non-current assets attributable to acquisitions, EBITDA, rose by 17% to 224 million krona. Operating margin, EBITDA, amounted to 10%, and the after-tax result rose by 18% to 126 million krona. The strong performance returned by Indutrade during the final quarter of 2013 has continued into the first quarter of this year. Net sales are up 10%, while the EBITDA result has increased 17%. The main drivers were the acquisitions made during the past year, all of which have contributed significantly to the strong development. That, as well as the recent strong growth shown by Indutrade's operations in Switzerland, as well as the UK and Ireland, a process that's continuing. On the other hand, organic growth within the group is still insignificant. Finland, whose exports to Western Europe have improved, is however continuing to experience a weak domestic market, which is being negatively influenced by events in Ukraine. A surprising development during this quarter was the fall in order intake within the energy sector, which had previously been a particularly strong growth driver. However, despite that, the first quarter has turned out to be yet another affirmation of strength from Indutrade. We turn now to Indutrade CEO Johnny Alvarsson. Indutrade are continuing to show really strong performance. Now, what are your comments regarding the positive results of the first quarter?
Our strategy of owning component suppliers in different market segments and in a number of geographical markets continues to show its strength. Weak growth on one market is often compensated by others, which have performed more strongly. In the same way, weaker organic growth is compensated by acquisitions financed by a strong cash flow.
A big part of the reason behind the good result lies in your recent acquisitions. On the other hand, you say that your organic growth doesn't contribute in any significant degree. Is this a cause for concern?
In many segments and markets we have organic growth, even if it isn't so strong. The level of incoming orders to the process industry has now risen for 2 consecutive quarters. This will be reflected in our invoicing later in the year. Finland is an important market for us, and we are a little concerned about how things will develop there. Some export companies are enjoying a healthier level of incoming orders, but generally the market is continuing weak, which could be a cause for concern in the future.
One surprise during this quarter was the low level of incoming orders for the energy segment. What's your view on this?
We have experienced very strong growth for several years. This is a project-based segment, and having a low level of incoming orders across an entire quarter is unusual. Our order stock is as high as it was a year ago, but unless we see a rise in incoming orders during the second quarter, 2014 will be something of an in-between year for this segment. However, looking at the longer term, we see no cause for concern.
During 2013 and up to the present time, you made 9 acquisitions, the latest one being Svenska Geotech AB, a niche infrastructure company. 5 of your acquisitions were made by your industrial components people and 4 by special products. Is it a coincidence that just 2 of your 5 business areas made acquisitions during this period? Or are there any other reasons for the 3 other business areas not making any acquisitions of their own?
Yes, it is a kind of a coincidence. The main reason is that the companies we acquired were best suited within industrial components and special products. Acquisitions in Europe are made in subgroups within special products, where the local management in each respective country is actively involved in the acquisition processes.
You've been particularly successful in Switzerland, Netherlands, Ireland and the UK. What makes these markets attractive to you? For example, the UK.
These countries have an industrial history that suits to the Indutrade model, with many family-owned components companies. The UK is 8 times the size of Sweden, The old large-scale industries have moved out of the country, but there remain a number of smaller specialized companies, more often than not family-run and experiencing generation shift issues. They are run professionally and prioritize profitability, which is wholly in line with our strategy. We are in the process of building up local competence in the UK with regard to acquisitions, where we see considerable potential.
And finally, could you tell us briefly what factors in your business model you feel are the primary growth drivers behind your success?
Simplicity. We buy only profitable companies. We keep the existing management in place, who have obviously been successful. And we avoid integration to enable the company to continue on its profitability path. We don't steer the operations in detail. They continue to serve the customers in the best possible manner. We provide them with industrial know-how and a skilled and experienced board of directors.
And those words from Indutrade CEO Johnny Alvarsson bring this presentation to an end. We'll be back with the report for the second quarter of 2014 on the 23rd of July. Thanks for being with us.